Hi traders, Jean here, and in today's video we will go over the USD Canadian dollar. And as always in this video you will learn how you can approach the forex market or any other market with our simple mechanical trading edge. And this edge of course have specific rules you have to follow, and with the rules of course your trading becomes much easier because you are in the business of decision making. And in this case, whenever you have the clear rules to follow, your results of course will be better on the long term. So discretionary trading, it's something that I don't suggest from my trading experiences, but when you have a clear, simple trading rules, mechanical edge, then of course you will be, I think, more successful on the long term. I'm just a clear example of that, and as well, most of my students who are determined, who are passionate, who are committed to succeed, all have really good results since joining in my mentorship. And in this case, in this video, I mean, on the USD Canadian dollar, this was almost 2 times the risk in terms of risk and reward ratio trade. So this is just a 15-minute time frame. Shortly, we were trading this market structure shift on the 15-minute time frame, and we will go over the charts quickly, but in this case, just for quick information, we were trading this, what we call accumulation, manipulation. Here, this is manipulation, and then distribution phase. So let's go to the charts and continue doing that. So use the Canadian dollar. What we saw today, it's always important that you start your analysis of the hard time frames to understand the bias, the structure overall. And what we saw today was of course this beautiful retracement on the daily time frame. Market was retracing, and what we noticed that yesterday low here was swept. So as you can see today at the early pre-London trading session, market sweep the yesterday low, and on the lower time frames we were looking for possible shift to the upside in order to trade that move higher. Now if you go to the 4-hourly time frame, what we also noticed here on the 4-hourly was this sell side liquidity. So as you can see from yesterday, market formed these hard time frames sell side liquidity, and whenever market forms this kind of hard time frames liquidity, of course when the market is approaching that level again, we want to see potential lower time frames reaction and shift there. So in this case, if I zoom out, you can see that we had also at that price level here, we had also nice bullish imbalance, the fair value gap level. So this was just another confirmation, another, let's say, another reason to look for potential long opportunities here. So I'll just leave that level up like here. And on the 1 hourly, what we have also noticed is that once this hard time frames sell side liquidity was taken, we had nice, as you can see, nice respect price. As you can see on the next candle, we had nice beautiful spike just for confirmation, and also the market created another hard swing point here. So our idea was to look for that reversal. What we call is, our trading model is, we are looking for that accumulation, manipulation, distribution phase. So in this case, Asian session range here is our accumulation. Then this is, here is our manipulation. And when the market took this hard time frames sell side liquidity and market gave us this confirmation shift on the lower time frames, then of course our plan is to trade this distribution, this reversal back to the upside in this case. So if you go back to that 1 hourly or even 50-minute time frame, this is where we got our nice shift to the upside. So in this case, that was our accumulation. Then we understood that this is the hard time frames liquidity level, the sell side liquidity level, and as the market was approaching the London trading session, we had nice took of liquidity, price formed this lower high, took the lows again, took this sell side liquidity as we speak, and market then shifted to the upside. We had this bullish imbalance, the fair value gap level, and as the market confirmed at this shift at the lower time frame, we decided to put a buy stop order above this confirmation with the stop loss below the structure, below low of the days. In this case, the stop loss was 12 pips. We took this trade in the London session, and our target was, of course, overall the 4-hourly highs, the buy side liquidity, and also the Asian session highs. So this is what we called before an accumulation, manipulation towards the hard time frames liquidity, and our shift to trade this distribution phase. So this trade was really beautiful, and this is the model I'm trading myself for a long time, and that's also the model I'm teaching my students. As I said, those students who are, who joined to my mentorship just to learn a simple mechanical edge, they can execute successfully on the long term on the markets. And most of them, why I mean most of them, because many traders are lazy and not committed, but those who are ready to commit to one edge, to one strategy, and execute those trading rules consistently, they will see success. And then when you will learn this approach, when you will master it, then of course you can achieve good things. You can trade successfully your own account, you can pass prop challenges, you can trade successfully for yourself, you can manage other people's money, and so on. But the thing is that you have to have a clear, simple trading rules, manage the risk, and then of course do that consistently on day-to-day basis. So if you want to learn more, make sure you check my website to join my mentorship program, and if you are committed, I will help you to reach your trading goals. So thanks for watching, and we catch up soon.